Hello everyone, I welcome you all at Smarty Education. Today we will begin with lecture number 2 of national income. If you have not watched lecture number 1, I suggest you to go and watch lecture number 1 and revise it. In the description box of video you can find notes to download. I have prepared a handwritten notes for all of you. This video will be free of cost and the whole course will be available free of cost. I just want your subscription, like the video and just share with your friend. That's what I want from all of you. Since in lecture number 1 studied a lot of things, now it's time to begin with net national income, net national product at factor cost. So what is net national product at factor cost? Net national product at factor cost is the net output, evaluated at factor price. It includes income earned by factors of production. Now what do you mean by factors of production? Like, it will include wages and salaries, rents, profits. It is also called national income. So it is a very important perspective from the MCQ that NNP is also known as national income. This measure differs from NNP at market price in that indirect taxes deducted and subsidies, indirect taxes are deducted and subsidies are added at NNP at factor cost. Okay, so there is another formula. For national income is that GNP at market price minus depreciation minus indirect taxes plus subsidy. But there is a very less probability that this formula will be asked in your examination. Okay, so now let's come at the down of the paragraph. Normally NNP at market price is higher than NNP at factor cost. Why normally it is higher than, why NNP at market price is higher than NNP at factor cost? Let's see. Because indirect taxes exceed government subsidies. However, NNP at market price can be less than NNP at factor cost when government subsidies exceed indirect taxes. Okay, so the thing that here they say is that first of all we need to know NNP at factor cost, indirect taxes exceed government subsidy. What does it mean by taxes exceed government subsidies? Means the taxes are greater than subsidies, and taxes are greater than, when taxes are greater than subsidies, then NNP at market price will be higher. Why it will be higher? Let's get to know that. However, NNP at market price can be less than at factor cost when government subsidies exceed indirect taxes. So the thing is that we need to remember, whenever taxes exceed, means taxes are higher than subsidies, NNP at market price will be higher. But in case when will be NNP at factor cost will be higher? When indirect taxes exceed subsidies. I hope you got the point. If you didn't, please comment down below so that I can reply you immediately. So now let's talk about domestic income. So first of all we need to know the word domestic. What do you mean by the word domestic? Domestic means household. Okay, so I can say that household income. So income generated or earned by factors of production within the country. That's what I said. Household means inside by factors of production within the country from its own resources. It's called domestic income. And even I think you have all have heard that Modi ji says that please use local products so that domestic income can increase, because if we import many goods from China, our money will go outside and it will ultimately lead to financial ultimately lead to deficit. Okay, sorry for the voice problem. There are some technical issues that I am solving now. Okay, now let's talk about what domestic income includes. Wages and salaries, rents, including input house rents, interest, dividends, undistributed corporate profit, means which are being retained in the company, including surplus of public undertaking, mixed income consisting of profits, self-employed person, partnership, direct taxes. Now, since domestic income doesn't include income earned from abroad, so what did I say? Domestic means household. Household means inside the country. So it is obvious that it will not include income from abroad. Income from abroad means whatever we earn from foreign country by exporting. Okay, so domestic income is equal to national income minus net income from earned from abroad. Why did I say that? I said that because domestic income means within the country. Thus the difference between domestic income and, ignore this, domestic income and national income is the net income earned from abroad. So if I reverse the formula, if I send this here, so domestic income plus net income earned from abroad is equal to national income. But the net national income earned from abroad may be positive or negative. Why it can be positive or negative? Because if exports are in surplus, then import it will be positive, and if imports are more than export, it will be negative. I hope you got the point. If exports exceed that, that's what written here, that's what I explained you in the video. Now let's move on. Let's talk about private income. So what do you mean by private? Please write down in the comment section, what do you mean by private? So private means which belongs to an individual. Some of you might say, sir, my privacy is very important for me, so therefore TikTok cannot use it. So it's not like that in private income, but still you can refer to that meaning. Private income is income obtained by private individual. What do you mean by private individual? Means particular to a person. Particular to a person. From any source. From any source means which is not unlawful. That's what included in any source. Otherwise you will say, sir, I am earning money from drug selling. Okay. So now let's productive or otherwise and the retained income of corporation. It can be arrived at from NNP at factor cost by making certain additions and deductions. Certain additions means plus and minus. The addition include transfer payments such as pension, unemployment allowance, sickness and other social securities, remittance from abroad, windfall gain means lottery or from horse racing. Okay, interest on public debt. This deduction include income from government department as well as surplus from public undertaking and employees contribution to social scheme. So now let's talk about private income formula. National income plus transfer payments plus interest on public debt minus social security means which is like police. You can understand it like that. Profits and surpluses of public undertakings. So what do you mean by private income? Earned by a private individual from any source, which can include these sources that I explained you here. Now let's talk about personal. So in private income, we saw that there are certain things from which income is earned which is lawful. Now let's talk about personal income. I will even tell you the difference between personal and private income. First of all, let's understand what is personal income. Personal income is the total income received by the individuals of a country from all sources before payment of direct taxes in 1 year. So what do I mean by direct taxes? Direct tax can include income tax. Personal income is never equal to national income. Why it is never equal to national income? Because in national income what happens that we calculate income of a country, but personal income is never equal to national income because there are certain assumptions which national income cannot cover the entire individuals of country, but personal income can. Because the former includes the transfer of payment, whereas they are not included. Because in personal income we even include transfer of payments such as gifts, donations. Okay, personal income is derived from national income by deducting undistributed corporate profit which is retained in the firm, profit taxes, employees, social securities. These three components are excluded. Remember, what are excluded from national income? Profit taxes, employees contribution to a social scheme and undistributed corporate profit. These are three things which are excluded from national income. Very important from MCQ point of view, because they do not read individual but business and government transfer payments and other things. Now let's talk about formula of personal income. Very important. In this chapter I am again remembering you that formulas are all important. Remember, they can give you the formula, ask which kind of formula is this, what does the formula name. Okay, national income minus undistributed corporate profit minus profit tax minus social security. That's what I told you in the paragraph, plus interest on public debt. Okay, personal income differs from private income in that it is less than the latter because it excludes undistributed corporate profit. First of all, in private income undistributed corporate profits are ignored, and in personal income undistributed corporate profits are included. That is the difference between private income and personal income. Okay, so personal income can be is equal to private income minus undistributed corporate. Why minus undistributed corporate profit? Because it is not included in private income minus profit taxes. Now let's talk about disposable income. This is a very simple topic. You will all get to understand. So You are all living in a family. Okay, I assume that. Or personal disposable, remember the name, this can be known as disposable income or personal disposable income, means the actual income which can be spent on consumption by individual. For example, you buy groceries for your family, fruits, vegetables, milk. This will be all considered under disposable income, that actual amount which can be spent by your family. Okay, let's get to the formula. Disposable income is equal to personal income minus direct taxes. Another formula is consumption expenditure plus savings. So disposable income is equal to national income minus business saving minus indirect taxes plus subsidies. Okay, minus direct taxes on person plus minus direct taxes on business minus social security payments plus transfer of payment plus net income from abroad. Okay, now let's talk about real income. Second last topic. So what is real income? Is the national income expressed in terms of a general level of prices. General level of prices means very general. Of a particular year taken as a base, means particular year will be taken as a base. Okay, that's what written in the formula. In order to find out the real income of a country, a particular year is taken as the base. That's what's written here. Okay, now directly let's get to the formula, you will understand it. So real national net national product for the current year into base year, that's what I written in the paragraph. Okay, which should be equal to 100 upon current year index. Just remember the formula and just conceptual wise, what is real income, which is generally expressed as general level of prices of a particular year taken as a goods. National income is the value of goods and services produced as expressed in terms of money at current. Whenever you are expressing something at current price, it is known as real income. Okay, this is the last topic of our chapter. Let's get to understanding what is per capita income. The average income of the people of a country in a particular year, the average income of a country of people in a particular year is known as per capita income. Average income, what do I mean by average income? For example, there are many people living in a country, but what will be the average? You will all know the average meaning. So if you don't know, comment down below, I will reply you individually. This concept also refers to measurement of income at current prices and at constant prices. Current prices means particular to a year, and constant prices mean which never change. The formula is per capita income is equal to national income upon population. Now all the important formulas are written here. I am gonna not read them because I think you will get in the notes, and I have even explained each and every formula in detail. Okay, so just take the screenshot. I am waiting for you for 3 seconds. Now let's move on. I assume that you have taken the screenshot. Okay, now it's time to solve some MCQs. The first MCQs means the actual income which can be spent on consumption by individual. I told you in this video answer. Personal disposable income. The formula to derive NNP at factor cost. We have read this formula many times. Tell me the answer. Think of the answer. The answer is NNP at market price minus indirect taxes plus subsidies. Okay. GDP is an index price of price change of goods and services included in GDP. I have told you GDP deflator in the previous video. Now the formula to compute GDP at factor cost is, okay, try to remember, formula is net value added plus depreciation. Now the formula to determine real GDP is, I have told you that base year will be taken equal to 100. Okay, this is, so that's it for today's guys. I hope you like the video, and if you like the video, please like the video, please, and please write present down in the comment section so I can mark your attendance, and more interesting video will be coming on your way. So